Hey everyone, welcome back to Corporate Decoder. Today we're diving into Innoviz Technology's latest annual report. It's like unwrapping a gift, except instead of a shiny new toy, we get to see how a company that makes sensors for self-driving cars is doing. And trust me, with all the twists and turns in the self-driving world, there's bound to be something interesting. The big picture? Innoviz is trying to navigate a challenging road in the autonomous vehicle industry. Are they staying on course or are they veering off the road? Let's find out. First things first, let's take a look at what this report covers. It's got all the usual suspects, the company's history, what they do, where they're going, and of course the numbers. It's like a school yearbook, but with less awkward photos and more financial data. This report is specifically for the year 2024, so we're looking at their performance over the last 12 months. It's a snapshot of their financial health as of December 31st. Speaking of shares as of the end of 2024, Innoviz had about 169.4 million ordinary shares floating around. This number is good to keep in mind because it can affect things like earnings per share, which will help us value the company. Right off the bat, this is not a shell company report, meaning Innoviz is a real operating business with actual products, customers, and money making. Alright, before we get too deep, a quick warning. This report, like many others, contains forward-looking statements. Basically, these are predictions about the future and they come with a disclaimer that things might not go as planned. Always remember this when looking at what companies themselves say. There are lots of things that could make Innoviz not meet its plans, such as cost-cutting by car makers, expensive components, delays, competition and traffic accidents involving vehicles using their technology. Now, let's get into the heart of the matter, the financial results. Innoviz had revenues of about 24.3 million, while also incurring a cost of about 25.4 million to make those sales. Ouch! That means Innoviz has a gross loss, but don't worry, the loss isn't as severe as the previous year. It clocked in at about 1.2 million compared to 11.6 million the year before, so things are trending in the right direction at least. Where did they put their money exactly? They spent 73.8 million on research and development, or R&D, 7.5 million on sales and marketing, and about 19.5 million on general and administrative stuff like salaries and legal fees. Innoviz, like most technology companies, is spending a lot of its money on innovation, hiring and expansion. So the spending adds up, and their operating loss was almost 102 million. Keep in mind that they have been improving a lot since the loss was about 133 million the previous year. Now, Innoviz does have some financial income, mostly from interest, but not enough to meaningfully impact their financials. The final number, Innoviz had a net loss of about 94.8 million. The good news, again, is that it was lower than the almost 123.5 million loss from the year before. So it seems like the company is trying to do a bit better, but still losing a lot of money for every sale. Speaking of money, Innoviz notes they will likely need additional funds in the future. This is common for companies still trying to grow, but it's something to watch. It might mean they need to borrow money or sell more stock, which can affect the value of existing shares. The report mentions they depend on a few customers, particularly Volkswagen and Mobileye. Having big customers is great, but it also means Innoviz's fate is tied to those companies' decisions. If those key programs get terminated or postponed, Innoviz may have big problems. Whether self-driving cars become super popular is a big question mark for Innoviz. If the market doesn't take off, their business will suffer. Selling and operating in different countries poses difficulties, including currency changes, unstable economies, complying to legal requirements, and protecting their technology. Speaking of legal, government regulations are a big deal. Things like safety rules for cars can change, and Innoviz needs to be able to adapt. Cybersecurity is also a major risk. Hackers could target their systems and customer data, which could disrupt operations, hurt their reputation, and expose them to big costs. The war in Israel is also mentioned as a potential risk factor. Since most of their employees are located in Israel, ongoing conflict could disrupt their business and operations. To make sure people at the top are making decisions with the shareholders in mind, they have a related party transaction policy. One last thing to keep in mind is that as a foreign company, they do not have to follow all of the US listing rules. For example, rules for shareholder meetings. Alright, so what's the bottom line here? Innoviz is still in the high risk, high reward phase. Financially, the numbers are not pretty, but looking past the raw numbers, it is important to note that those numbers are improving. At the same time, there are improvements such as those with Mobileye and Volkswagen. The direction of the company is what you might expect from a growing technology company. they're spending a lot on R&D to keep innovating and on sales and marketing to reach more customers. The main strength of the company is having great tech, relationships with big players in the car industry, and an expansion-driven CEO. There are a lot of outside forces and risks that have nothing to do with Innoviz's innovation though, such as government regulations, cyber attacks, and economic conditions. Whether the world will adopt self-driving vehicles is what makes the biggest difference in this company. So this stock has high risk but high rewards for the patient investor that believes in the future. Cabriai, thanks for watching. If you enjoyed, please subscribe, like, and comment.